If you own property in San Francisco, it's getting pretty bad. San Francisco commercial property owners have billions in debt coming due. What is going to happen? Because you have units like these, prime real estate, corner unit. You used to have the Apple Store as your client. Now you have nobody. And it's only going to get worse. For example, there's a company in San Francisco purchased 1 Stockton Street, which previously housed the Apple Store, for $42 million, right? It's a 3,000 per square feet office building. This is like very expensive. And it's also right next to some of the biggest homeless encampments ever. Right across, you got right there, that's kind of peeping out. This is going to be one of the biggest hotels in San Francisco, Park 55 Resorts. They defaulted on like a $700 to $800 million loan because they can't pay it. And also this location has a pretty large amount of drugs and homeless population, which the city just will never clean up. Now 1 Stockton Street is completely empty. The T-Mobile store is also down. And it seems like a lot of these owners who own these high-end retail spaces are down bad. If you look at what's going on, we're seeing a lot of these landlords, they're going to have to pay some of the mortgage in 2024. Either that's due in the next month, in the next week, or even the next few days. And a lot of these debts will be due in the next 3 months. That's kind of like the first quarter of the year. So around March, we should be seeing many of these debts due. And if you don't pay, the banks take it. And what's really crazy about this is banks don't even want these buildings because they're completely empty anyway. Banks want hard money. They don't want your lousy building back. Yes, you might have bought this building for $3,000 per square feet. You probably only could be able to sell it for like $1,000 or less than $1,000 per square feet. It's really sad to see a lot of these business owners who spent so much money buying these high-end retail spaces just for these high-end retail spaces to basically evaporate in terms of value, and it really sucks. And check this out, it's official. San Francisco office vacancy rate sets a record high of 35.6%. But don't even trust that 36.5%, whatever it is. It's like the high 30s. It's a way higher than that. There's so many buildings in San Francisco where it's still being leased out, but there's no tenants, there's no employees. Like the iconic 181 Fremont. This is where Facebook, or I guess Meta, used to be located. It's like a super high-end skyscraper, but there's no tenants, despite Meta still leasing 435,000 square feet. So once these leases are up, and a lot of these zombie leases everywhere, I think San Francisco vacancies right now are more like 40 to 50%. In fact, some buildings have vacancy rates up to 80%. This is how bad it's getting. And it's getting so bad that even Brooklyn Basin, which is supposed to be housing many of the San Francisco tech workers in Oakland, have stopped building. They halted 50% of their land acquisition, stopped building because if they keep building more, they'll actually tank their own value of their apartments. There's nobody renting Oakland anymore, and Oakland's population is declining. This is why Oakland's rent just dropped 10 to 20%, because they built so many apartments anticipating all these office workers to come back, but nobody came back. And San Francisco is just the same old city with high crime, homelessness, and just car break-ins every single day. And San Francisco's office vacancy rate is setting a new record, guys. 35%, 36% is nothing to laugh at. I think by the end of the year, the official number, probably like 43%, is a very realistic number. This is one of the highest in the world, and it's only going to get worse. And look at this. Barings looks to sell 20-story office building in San Francisco for just $80 million. Despite 10 years ago, Barings bought this building for $160 million. Can you imagine you bought real estate 10 years ago for a nice and steady income and a nice and steady appreciation of value just so you could sell it for 50% off? And by the way, $1 million a decade ago is worth so much more than $1 million now. I mean, 10 years ago, there was still the Happy Menu, right? There's still a dollar menu, and you could actually go to Walmart with $100 and come out with a whole cart. Nowadays, you can't do that. You go to Walmart with like $200, $300, you come out with like barely anything. It just shows you that inflation is eating away at the profits, and I guarantee you, they're not selling this for $80 million. Even 50% discount probably can't get any buyers on the market. It's how bad it's getting. In fact, some Chicago buildings are experiencing like, 90% off? There's this building, it was like very nice, 12 stores pre-war, near the Loop, sold for 89% off. $4 million for something like 200, 300,000 square footage of space. And it's only going to get worse, guys. Considering the fact that a lot of these debts are coming due, it's getting pretty scary. And before we leave, check out the private Discord server. Last week, one of our traders made a bunch of money. So trade with us, guys. Make some money with us. And guess what? 7-day free trial. Patreon link below. Check us out.